Hey everybody, welcome back to Chipstock Investor. Nick here. Big question that we can now start to answer after Nvidia's Q3 earnings update here in November 2025. We are headed into 2026. Is Nvidia still a good stock to own as we head into the new year? And we have some good guidance that takes us into January of 2026. So let's dig into it. Per usual, we're going to take our moderate approach to things because we have some really big bull theses out there, as well as some really big accusations, very serious accusations being levied against Nvidia and its supply chain as well. So this is going to be a high-level, moderate look at what is going on for Nvidia, what's working right now, the approach we're taking as we head into the new year with our position. And if you want more of this discussion, including a breakdown of the big bets on Nvidia as well as the big bets against Nvidia, make sure to check out Semiconductor Insider. We have a new web app that we just launched. You can find all of our research there. Check it out. Just $10 a month if paid annually. You'll hear about all sorts of tech trends before everybody else is talking about it out there on the media and social media. Let's start with our end market chart. And we updated this early this year. Remember, we had the transition to Blackwell that caused some bumpiness in earnings results, a little bit of deceleration of growth, but it was pretty obvious early this year that Blackwell was going to result in a re-acceleration of the accelerated compute market. And that's exactly what we saw. This is the global IT industry spend outlook from tech researcher Gartner. Data center systems on pace for close to 50% growth this year. Early outlook, they expect 19% in 2026. So maybe next year we need to update our end market chart again to slowing growth once more. They're on the far right column. But at this point, data center systems still very much re-accelerating in growth. And you can see that in the Q3 update. Nvidia had forecasted 54 billion in revenue, ended up doing 57 billion, up 62% year over year. Jump quarter over quarter. Of course, remember we had the big exclusion from being able to sell in China last quarter. That was a bit of a headwind, to say the least. But we're back in all-out growth mode again. Net income on a GAAP basis up 65%. And on a per-share basis up 67%, thanks to, of course, some stock buybacks. The far left column here is Nvidia's quarterly revenue trends, 51 billion in data center sales. Pretty incredible. Still close to 90%, 9/10 of the business directly tied to data centers. So the hyperscalers, the neoclouds, enterprise compute customers that don't rent the data center out, but use it themselves. Nice to see the gaming and ProViz segments also notch some really, really fantastic year-over-year growth. But of course, that is these days the minority revenue segment for Nvidia. But of course, the big thing that we want to be concerned with, and the reason why Nvidia is moving after hours, it's not what just happened, it's what is expected to happen. That is how businesses are valued. Nvidia says that we should be expecting more of that reacceleration of growth. So 65 billion at the midpoint is the outlook. That represents 65% year-over-year increase in total revenue. Gross margins also re-expanding again, expected to be up 1.8 basis points. It was 73% in Q4 last year, expected to be close to 75% at the midpoint now. GAAP operating expenses, 6.7 billion, big increase in operating expenses, but notice it's growing at a slower pace than revenue. This is what you call operating leverage. The revenue growing faster than operating expenses is very good. That's a very good problem to have. It means your business is scaling and you're going to have profit margin expansion as a result. Next line item here, GAAP other income. This is mainly going to be a result of the investments NVIDIA is making, including the equity investments, cash on balance, and interest. They just have it pegged here at 500 million. A year ago, it was like 1.3, 1.4 billion. So that's what that 58% decrease is here. And it's one of the reasons why the implied GAAP earnings per share, all the way there at the bottom, is expected to grow 63% based on the little calculation I just did here using the outlook. 63% earnings per share growth to close out this fiscal year, which will end in January. Not bad. Let's talk about the risk. And I think you know this quite well. We talk about this quite often. Thinking about the risk for NVIDIA and this whole hyperscaler build out cycle, all these companies spending too much money on their data center infrastructure. And the fact of the matter is they are getting positive return on investment. Maybe for Oracle, that's debatable. They're newer at this game and they're trying to build as much data center capacity as they can in support of OpenAI. So that's maybe a different story. But CapEx to revenue, it is elevated for the hyperscalers, minus Amazon. They're still at a very modest CapEx to revenue ratio of less than 0.2, but they're getting good return on investment. That said, it is elevated. This is a cyclical thing. And at some point, the biggest risk to NVIDIA is something very inglorious, very simple, and perhaps so obvious that nobody wants to really address it. We have to come up with these exotic things like depreciation schedules to explain the risk for all of this. The risk is this growth cycle comes to an end and the market is too short-term minded and clobbers NVIDIA stock, like what happened in July, August 2024, like what happened earlier this year in the spring, first and second quarter of the year, and like what will happen again. Hardware businesses are cyclical, and eventually this build-out cycle will come to an end. And that's quite simply, in our view, the biggest risk to owning NVIDIA, because we don't know when that cycle is going to end. And so at this point, we're happy. Q3 was very good, as expected. Q4 is expected to be even better. And Jensen and CFO Colette Kress both reiterated that outlook for $500 billion in Blackwell and Rubin sales from the start of this year, concluding in fiscal 2027, next fiscal year. So it appears that this growth cycle will continue into next year. So we're not seeing any imminent risk. Of course, there's going to be stock price volatility, and that is going to create a lot of narrative around that stock price, trying to explain why the stock price fell. And that's just silly. Stock prices go up, they go down. But that's what we're looking at right now. We're happy with these results. And again, if you want more on this discussion, check out Semi Insider, link in the video description below, or visit chipstockinvestor.com. See you all over there.